You know what I find absolutely remarkable about the bear market as well? Not only is it amazing that people are buying shitcoins still, um, but every time there is any kind of relief rally, so many people think, oh, all of a sudden the bull run is back. Something happened overnight that was like, oh yeah, now let's start pouring money in. When if they would look outside and maybe think about reality for a minute, they would understand that the macroeconomic environment is exactly as shitty as it was the day before. I mean, what has changed since several days ago, since before Bitcoin was pumping? Nothing. I mean, the worst, honestly, is likely yet to come. And I'm going to talk about a couple of reasons why. We're going to make this one pretty short. So, first of all, if you just want something quick, don't FOMO in right now. I mean, yes, it's been pumping for 4 days, but you know what's funny is if you zoom the fuck out, that's what the last 4 days have looked like. It's looked like this, okay? Um, you know, I mean, you look at these various crab zones. So this was May to June. So this was a month of crabbing before it fell off a cliff. And then this was, oh man, that was like 6 months before it also fell off another cliff. And the reason is, if you look at what's going on overall in the economy, you would see that there's no reason for this to be any more than just a bear market rally. It will pump for, who knows, a week, 2 weeks, maybe 3 weeks, and then it's going to go drop down. This is not the final leg down, the one we just had. And so, one of the things that's the most important and most telling is the Fed's fight against inflation. So, everybody knows inflation's crazy. It's probably sitting around 6, 7% still. And it, this is after like 4.5% interest rate raises. So they've done a lot over the last year to try to fight inflation, and you could argue that it's working, right? But the thing about it is, killing inflation is not just the answer. When you raise interest rates as much as the Fed has done, you essentially hurt and destroy the economy. And you can see this from the tech sector. Amazon's firing people. Coinbase today just laid off like 1,000 workers. You know, Elon canned half the people at Twitter or more. I mean, these are telling signs that a recession is coming. Earnings are going to start going down. And what does that mean? If earnings go down, well, then the stocks go down. And so that is the most important thing to understand here is that if the Fed has killed inflation, or they think they've killed inflation, they will pivot and they will slow down the rates that they raise, um, the, the rates they raise and how often, and they'll just kind of pause there for a little while and just see what happens, right? They may need to increase again if they see inflation coming back. But the point is, the real bottom is some period after the Fed has raised the interest rates. And that's because it takes a while for the effects of the interest rate increases to make their way into the economy as a whole. And so that's when you start seeing, the lowered earnings. Companies are missing earnings, stock prices fall. And so that's what's important. We haven't hit that point yet. And so until we hit the point where, okay, the companies are laying more and more employees off now, that's the start. But once they start reporting lower earnings, their guidance is lower, their forecast is looking bad, and you see the stock prices start to slide, that is when you will start seeing the bottom. And so, you know, to think, and you might ask, how does this relate to cryptocurrency? To sit there and think that, these markets are not tied together is foolish. Um, and so if the stock prices are going to start falling and we'll hit a new S&P low, well, you're going to see the same thing with Bitcoin. You can't make this argument that says, "Oh, it's already dropped 75%. It can only drop 25% more. No, that's not. It can drop another 99% and it can drop 99% after that, right? So you got to understand that these bear market rallies are great times for you to exit some positions if you need to. For example, maybe you bought strongly down here at 16K like I did. 18K, if it goes up to 18K, that's not a bad place to exit. I didn't even remember we hit 18K in December. I don't remember that happening. Um, and also, we can look at the volume. The volume's low. We've already started dropping volume, so this low volume pump that's happening now is going to fade, right? In order to have the sustained rally, you need more and more and more. It takes a lot of inertia to sustain the rally and keep the price what is at, especially in the economic conditions that we're sitting at. And then, if you go out and you look at Bloomberg or you look at any of these mainstream media articles, a lot of them are conflicting, yes, but you can get a lot of information out of this. Stock markets brace for strong move as U.S. inflation data looms. And so this is exactly what the Fed doesn't want. They don't want the markets to pump, right? They want to cool the economy so that inflation dies. So, what's going to happen? This week, they're going to release the CPI numbers for December. CPI is likely to be lower than it was in November. So the markets will pump. Now, if the CPI numbers come in lower than expected, you might have some, you might have a retrace, right? But if inflation is indeed coming down, it means the Fed is getting closer to its pausing position where they will pause raising rates just to see what happens. So, in my opinion, and again, this is not financial advice, it's just fun to kind of speculate, do what you want with your money. This rally probably is not done yet. It's probably going to go up to, at least 17.5. It's already hit that. Well, it might even push through 18K. And then it's going to come back down, just as all these other bear market rallies do, because the macro has not changed. Things are still terrible, and we're not yet ready to pump. That's it. Again, not financial advice.